Welcome back to Alpha Recap, your end-of-day wrap on the market themes that matter. Markets closed with a pretty clear split today between structural winners tied to the energy transition and big-ticket tech commitments, and the more headline-sensitive corners that got hit by geopolitics and regulatory noise. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack. Renewables and big tech led the way, while crypto, cannabis, and some energy names were under pressure. So, what really stands out here is how thematic capex and regulation were both drivers and constraints today.
Right. The tape felt almost like two markets in one. On the one hand, utilities and materials enjoyed momentum from renewable project onlines and supply agreements. On the other hand, geopolitics and legal headlines kept risk assets jittery.
Exactly. The headline grabbers were pretty big. One company increased a data center commitment to more than $10 billion. Another launched a roughly $6.7 billion bid, and an offshore wind project actually started delivering power. Those weren't small items. They shaped cross-sector flows.
And that pushed a lot of related suppliers higher. Construction crews, turbine makers, copper and rare earth miners. I mean, when you step back and look at this, the transition is starting to ripple across the whole industrial base.
Let's break it down, starting with the outperformers. Utilities were in focus because an offshore wind project began delivering power, which moved the story from promise to revenue. That matters for regulated utilities and anyone tied to grid upgrades.
Materials also outperformed on deal flow and clearer project timelines. Think copper plans and rare earths offtakes. Rio Tinto gave a mid-2030s timetable for Arizona copper, and Linus tied up more supply for rare earths. That kind of visibility feeds into miners and cyclical industrials.
Healthcare joined the winners because of regulatory wins and M&A activity. There were FDA approvals for some mid-sized names and a large bid that signaled M&A appetite in biopharma. That tends to lift sector sentiment when deals start popping up.
Short reaction.
Big move.
And now the underperformers. Crypto was weak. Concentrated selling, minor liquidations and legal friction led to fund outflows and more volatility. That tightened liquidity and raised implied volatility for crypto-related names.
Cannabis saw renewed scrutiny around contamination and regulatory checks, which undercut what had been mostly positive state-level momentum on legalization. That binary regulatory risk kept sentiment fragile.
Energy was jittery too. Oil traded near about $100 a barrel as Middle East tensions lingered, and legal disputes in places like the North Sea added complexity. So even though renewables are a long-term theme, the near-term commodity backdrop stayed volatile.
Short reaction.
Not what anyone expected.
Right. And the other thing is tech. It was mixed. Big capital commitments and price actions counterbalanced defense wins, robotics, and cloud contracts. So the sector sat in a sort of neutral zone. Secular growth intact, but profit mix and regulation muddying the water.
Let's unpack the cross-sector themes next. Theme 1. The energy transition was clearly multi-sector. An offshore wind online and more solar and storage capacity meant utilities, materials, and some industrials were linked by a single narrative.
And Theme 2, geopolitics tightened commodity markets. The Iran conflict passed the month mark, and that kept risk premia in oil and shipping. Higher energy prices feed into consumer costs and central bank discussions about inflation, so it rippled into finance and real estate too.
Theme 3 was capex concentration. One large tech company boosted its El Paso data center plans, and that kind of multi-year, multi-billion-dollar commitment creates durable demand for power, construction, and material suppliers. It really concentrated upside for exposed providers.
Theme 4. Regulation remained a defining short-term factor. Cannabis, crypto, telecom equipment bans, these policy shifts generated binary outcomes. An approval or a ban can send small-cap and sentiment-driven names sharply one way or the other.
And Theme 5, monetization and pricing power in media and consumer showed up. Streaming price moves were in the headlines. Price increases create potential margin upside, but they also test subscriber elasticity.
Okay, time for some of the biggest individual stories. First up, the data center commitment. One major tech company increased its regional data center investment to more than $10 billion. That really reinforced demand for power contracts, construction services, and networking gear for years out.
That was a headline that echoed across contractors and data center REITs. And it tied right back into materials: copper, steel, electrical components, because large-scale builds need those inputs.
Next big move? A large biopharma firm launched about a $6.7 billion bid for a smaller targeted therapeutics company. That M&A action signaled a willingness to consolidate in pockets of healthcare. And that often pulls up the whole segment on M&A expectations.
Short reaction.
Yeah, that tracks.
Another major data point. Coastal Virginia offshore wind began delivering power. That moved the offshore wind story from pilot to production, which was important for investors trying to separate long-term potential from short-term promises.
On the supply side, Rio Tinto set a mid-2030s target for Arizona copper, and Lynas struck more rare earth deals. Those supply commitments fed the materials narrative around electrification metals.
Oil near $100 a barrel stood out as well. That tightened the macro picture and kept inflation on people's minds. Higher energy prices tend to be a headwind for consumer discretionary and some industrial margins.
Meanwhile, crypto felt the sting of miner sales and fund outflows. Concentrated selling lowered liquidity and increased volatility, which had knock-on effects for small-cap technology and fintech names tied to crypto.
And streaming. A major platform raised US prices, which is a classic test of pricing power. Analysts will watch churn closely to see whether the price hike translates to margin upside or subscriber fatigue.
Let's hit the practical takeaways. Just to be clear, this is informational. Analysts note these are market observations, not personalized advice.
First takeaway. Monitor CapEx beneficiaries and supply chain winners. Big commitments from data centers and auto CapEx increases create durable demand for construction, copper, and rare earths. Track providers with secured contracts or regional advantages.
Second takeaway, hedge near-term commodity and geopolitical risk. Oil trading near $100 a barrel amid geopolitical tension raised short-term inflation and margin risk. That suggested being mindful of position sizing in energy-sensitive allocations.
Third takeaway. Treat regulation as a catalyst window. Cannabis and crypto showed how binary policy outcomes can be. Event-driven exposure around ballots or federal guidance required active monitoring.
Fourth, distinguish secular winners from cyclical momentum. Utilities and materials were benefiting from structural electrification trends, whereas some consumer and communications moves were more about pricing experiments that could reverse quickly.
Fifth, consider ETFs and diversified vehicles for thematic exposure. Themes like offshore wind, electrification, and data center build-outs cross sectors. ETFs can reduce single-name idiosyncratic risk while still capturing the theme.
Sixth, remain cautious on crypto liquidity and concentration risk. Miner sales and concentrated flows increased the chance of sharp repricing. Keeping an eye on exchange flows and custody-related headlines was important.
Quick reactions segment.
Honestly, I was a bit surprised by this one.
Yeah, same here.
Okay, what should listeners watch next? First, the Iran conflict trajectory. Any escalation or détente will move oil and market risk premia quickly.
Second, federal CBD guidance and state ballot outcomes for cannabis. Those could be binary catalysts. Third, renewable project timelines and virtual power plant rules. More on lines will materially shift utility generation mixes.
Fourth, M&A and earnings in healthcare and tech. The Merck-sized bid was a reminder that M&A can re-rate pockets of healthcare. And fifth, crypto regulatory decisions and minor balance sheet developments. Those directly affected liquidity and volatility.
Last watch item. Data center CapEx confirmations. Watch contractor backlog updates, power contract announcements, and permitting activity. Those make a big project actually investable.
All right, time for a concise wrap-up. Markets closed the session split between structural winners tied to the energy transition and big-ticket tech investments, and riskier, sentiment-driven areas that were weighed down by geopolitics and regulatory headlines.
The tone was cautiously constructive. Secular tailwinds for electrification, cloud and healthcare innovation were intact, but headline risk from geopolitics and regulation kept dispersion high. Active monitoring and disciplined position sizing were the sensible approach, according to analysts we referenced today.
Final quick takeaways. 1. CapEx-driven themes were strong. 2. Regulation created binary outcomes. 3. Commodity and geopolitical risk kept markets choppy. All informational, not advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next close with another sector wrap. Stay curious, and remember, this was informational commentary, not investment advice.